To hand the conference over to Mr. Nihal Jam from Edelweiss Securities Limited. Thank you, and over to you, sir.
Thank you, Janice. On behalf of Edelweiss, I would like to welcome you all to the Q1FY21 conference call of Sheela Foam Limited. From the management today, we have Mr. Rahul Gautam, Managing Director, Mr. Tushar Gautam, Director, Mr. Rakesh Chahar, Director, Sales and Marketing, and Mr. Dhruv Mathur, CFO. I would now like to hand over the call to Mr. Rahul Gautam for his opening remarks. Over to you, sir.
Nehal, thank you very much for coordinating this conference. And I really appreciate everybody else for joining in today morning and in probably the most unusual times. Let me just begin by saying that recently we concluded our AGM, and this was the first time that it was done online. Extremely good experience, and whatever feedback that I got both from the shareholders as well as the directors, that this was probably the way to go even in the future. So let's hope that some changes are going to be which will stay forever. Most of the questions were very focused. There was not too much of gallery play, and therefore it just went off very, very efficiently. We are all experiencing these COVID times. I think that each one of you would be as informed as I am. I think it's only the conclusions that we can draw from the different happenings all over the world, which is a little different. My side of it is that the uncertainty still continues. Understanding of the virus is still there. Vaccines, I know there are some which have been announced, and the government of India has also said in the next couple of months we should have some vaccines, and they have begun to make a plan how to distribute them. But most of the feedback says that it's going to be a while, probably by the end of this year, that we would see some kind of a vaccine, and then for it to be distributed and everybody to be inoculated, vaccinated. I think we should not see any kind of virus going away before the first quarter of next year or the quarter 4 of this financial year. It's a long haul, but I only wish, and I'm repeating it. I know everybody would be completely fed up of listening to this, but I think the 3 things that people talk about wearing a mask, washing your hands, and the social distancing, and just repeating it like what it is done on the MTNL or the telephone line. Since you know that we are present in India and we are also present in Australia and Spain, let me share with you that both Australia and Spain had one time peaked and come down, but both of them are having a second wave. Of course, not as bad as the first one. Completely measured by the number of deaths that are happening, but there is a second wave. And in Australia, they have already locked down one city, which is Melbourne. Sydney, which is the next biggest city, is also partially locked down. Spain has not yet done that. But we hope that this abates as quickly as possible. Coming back to India, we are experiencing that about 85 to 90% of the markets are open. We have recently reached our levels also ranging between 80 to 85%. The GST collections in the country are also indicative that the businesses on an average are around that. I mean, if we take 1 lakh crore as a monthly collection that the government thinks is normal, the last month was about 86,000 crores. We have different sectors, and of course the different segments or sectors are experiencing different levels of growth, averaging to about 80 to 85%. Auto took a little longer time to come up, but now it appears at least to July it's been close to 100%, and this month they are expecting it to be even better. Now, whether it's a pent-up demand or it is something fundamentally changing in the market, we still have time for it to emerge. The other experience that we had was that the smaller towns came around much quicker because the impact of corona was larger in the larger towns. And the organized sector, of course, did better than the unorganized sector. But it is not that the unorganized sector is completely washed out or anything like that, but their recovery is a little slower. At least in our business and in our segment, cash flows have been okay. I have not heard of people closing down on account of non-availability of money. And I expect and pray on behalf of everybody that any time between Diwali and the end of the year, things should be back to pre-COVID times, at least on the business part of it. We continue to worry about our people, continue to ensure that all our gyms, all our outlets, all our distributor areas, everything follow a very strict protocol of ensuring that corona is kept away or the virus is kept away. We are aware of within our own trade companies or complexes which have been shut down on account of widespread, and we would not like anything like that to happen. I'm also happy to share with you that on the medical coverage of the people who work in your company and the insurance part, both are very well covered. And even in the eventuality that something not good will happen, there is an insurance coverage which will take care of the family or whoever stays back. Last time I did mention about the impact of the China factor and impacting us in many ways. One is all the imports that come into the country from China. I did mention, and I'm repeating, that our dependence on that is very little. But then the other exports or the other imports that come into the country, we are looking at areas which can be where we can find substitution by our company or the indigenous manufacturing. There are other areas where China was exporting, whether it is to the US, Europe, or Australia, and we are looking at those areas to see that how India can be developed as an export, as an exporting country to those areas. The government has also taken steps and identified some 11 or 12 sectors, and at least a sector where we would have a reasonable say was the furniture side, which the government intends to develop as a big cluster and to take care of nullifying the imports and increasing the exports, etc. I know that there are laws like labor laws and land laws which are very state-oriented, and to overcome them is a problem, is an impediment for creating such infrastructures. But the way the government is thinking is to make SEZs like it did before, and you could have the land laws being different there, and you could have labor laws in a manner that they are competitive with any other part of the world. So we just expect that as far as the future is concerned, it should be interesting and should have a lot of potential. I recall our last conversation somewhere in June, where I did say that the raw material prices are low and steady and should be like this for some time. And I did put a disclaimer to it to say that I could be wrong. And actually, I am wrong. The raw material prices have been going up in the last couple of weeks. Two major raw materials, one is polyol and the other is TDI. Polyol, both were hovering around 110 rupee number. TDI has already shot up to about 160 in steps, but very quick steps. How much will it go up to? Very difficult to say. but anything at 170, 180, some number like that. Polyol is a far more dispersed manufacturing throughout the world, and I would say that it will probably go up to a 135, 140 number. But we need to look at solutions. We need to look at global solutions on this, and the company is working towards that. Such kind of quick movements in raw material, how do we kind of ensure that we are far more stable, both on the availability of the material as well as on the price part. One thing more that this COVID has thrown up is the risks in our doing business. So whether it is the IT systems that one uses or any other systems that we use, there are disruptions possible on anything. For example, on the IT thing, post Galwan, the number is 50,000 cyber attacks on the Indian companies and the Indian systems, which was there. So we are already working towards protecting ourselves and probably creating that all our standard operating procedures will have now a clause which will say if disruptions take place, how do we account for it or how do we negotiate disruptions? Coming back to the to our immediate quarter, which is being considered, undoubtedly it has been the weakest quarter in the past many quarters, so probably from the time that we have been listed. We did a number of about a 270 crore compared to a 500 plus crore that was the normal that was there. Fortunately, profit was still there, and fortunately, both our outlying or our companies or subsidiaries in Australia and Spain contributed handsomely towards both the top as well as the bottom line. In fact, in the Indian operations, the profit was only about 1 crore. Finally, we ended up with about 12 crores, so balance was contributed by Australia and Spain. And in spite of them being impacted by COVID as much as we did, but they have the operations there have not closed or never did kind of close. And in fact, the demand has been good and strong. It may be because of the robustness or the less diversity of those economies. It can also be because of the China factor, and it can also be because of the pent-up demand that must have been there or that's there. And both continue to be strong even now. I would like to conclude that an important part of your company is the Csr Activities. Last time I had mentioned that we did a quarantine center with about 10,000 beds that we had contributed. Fortunately, only about 2,500 are being used and that's good. It doesn't matter that setup is there, and it's working well. So our contribution has held in good or has held good in these times. We as a company have our standard things of as the skill development of the army training and working on emotional wellness. We continue. Of course, physically not much can be done, so we do that over webinars and over online contacts like most of the other things. So with these words, I would like to close and be open to questions from you. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. This is a reminder to all participants connected to this conference. Please limit your question to two per participant. You may rejoin the question queue if you have a follow-up. We take the first question from the line of Shivakumar from Unifi Capital. Please go ahead.
Yeah, thank you for the opportunity. Good morning, sir. Sir, my first question is with regards to the traction that we are getting to see in Q2. I remember from the Q4 call that in June you had seen sales to the extent of 60% of the previous year. So how has it been in July and August?
Thank you, Shivkumar. July and August. So July has been, I think I mentioned, close to about 80% plus, and August is between 80 and 85%. So every month or every 15 days, it's kind of creeping up to normality.
Right. Sir, in Q1, we see that the gross margin has come down in spite of the fact that TDI prices have been softer on a sequential basis. Any specific reason for that?
Dhruv, can you respond to that, please? Hello, Dhruv? I don't know. Maybe.
Okay, I will answer. I was on mute. Okay.
Oh,
okay. So gross margins, Shiva, there are various reasons for this. One is that there is a product mix wherein the low price mattresses have been much higher sale. Second is that we had to pay large amount of detention and damage in this quarter because of the problems at the port. This has increased our cost of raw material. Further, since the volume of purchase was much less, we did not get any volume discounts. Also, on low production, the yields are lower. So, and finally, we used to get some GST refund of around 0.5% of our sales in Kala unit, which has stopped in March 2020. So these 4-5 factors combined together have dragged down the gross margin from 49.7% to 46.3%.
So can we expect that to recover in Q2, sir?
It will recover. I think the GST refund impact of 0.5% will never come back. Unfortunately, the prices, the way TDI and polyol prices are going up, to what extent we can pass on to the customer, all that is a function of these two things. Other things, I think, with the volumes going up, will come back to normal.
Okay. Sir, and one related question to the first question that I posed. When you said that the volumes are back to 80 to 85% of the previous year, are you referring to only to the mattress segment or are you including the B2B segments also?
So Shiva, I'm referring to the entire business of the company. And if we will break it up into the B2B and then in the B2B break it up into the auto and the other sectors, it will be different. But I'm talking of the averaged out number for the company.
Right. Sir, and one last question on the export opportunity which you referred to in the Q4 call. Any traction there because you have done some trial shipments during Q4? Have you heard anything from the customers and can we see some revenue flowing in FY21?
So I definitely see revenue flowing in FY21. And I would say that all that is in progress. It's work in progress. And it's moving in the positive direction.
Thank you, sir. I'll join the queue for the other questions.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Naresh Vaswani from Samiksha Capital. Please go ahead.
Yeah, sir. Thanks for the opportunity. Sir, I wanted to ask on the opportunity side in the mattress segment in India, Europe, and USA. If you can give some color.
Voice is sorry for intervening, but your voice is coming through not clear, So
now can you hear me?
Yeah, it's better.
Yeah, sir, my question was on the opportunity side in the mattress segment. In India, Europe, and USA, can you just give me some color on how big the market is for you, which you are targeting in the longer term?
I don't think that I'll be able to give you a number. That market is many billions of dollars here. And what we will be targeting and what we can do, I would say that let's just wait for another quarter and I will give you the number then. Yeah.
Okay. And secondly, on this raw material prices going up, will we be able to manage this 14% EBITDA margins over next 2-3 years if the raw material prices stay at higher levels?
Sure, that is our goal, that we must maintain this EBITDA margin. When these raw material prices move for a small time, the impact is absolutely immediate because it takes a little time to pass on everything or redesign products or change our offerings as far as the market is concerned. But once they kind of stabilize, you are able to get that back. So right now, our attempt will be to ensure that we continue with these margins. A quarter or 2 quarters may be negatively impacted, but eventually it will come back. I mean, eventually it will be passed on.
Okay. Thank you, sir. All the best.
Thank you.
Thank you. The next question is from the line of Hiren Trivedi from Axis Securities. Please go ahead.
Thanks for the opportunity. So 2 questions. I would like to know more on the cost and other manufacturing costs, and there seems to be a sharp reduction. So could you throw some more light on how much of this would be sustainable going forward? And secondly, what would be your outlook with regards to the subsidiaries going forward? That's all.
Okay. So what I'll do is I'll answer the second question first, and then Dhruv will answer the other one. So as far as the subsidiaries are concerned, let's look at the Australian subsidiary. That's good and steady at the moment. It's also moved to a new normal, but we have to continue to understand that those markets are saturated markets, and we have a reasonable size of the market. But still, let me just share that what used to be at a level of about $6 million per month is now hovering around $7 million per month. And so we have been able to get a little more market share, etc. And I think it will be like that. On the Spanish one, the opportunity is far greater because we have very little of the entire European Union market. And it's also closer to the US. So I expect that the contributions or the turnover from Spain in the coming days will be much better. Dhruv, can you respond to the cost?
I can. See, in this quarter gone by, a lot of costs are low because of the volumes. And some of the costs, like manpower cost, advertising, marketing expenses cost, which are fixed costs, have gone down. And there has been a lot of strategic decisions which have been taken by the company to reduce the fixed manpower cost, and the traveling costs, and other fixed overheads. So, yes, the fixed cost will also go down, and we estimate that for the entire year, it would be in the vicinity of around 70 to 75 crores. Plus, whatever is variable cost will move according to the volume.
Fine. Yeah. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Puneet Saragi from Hillfort Capital. Please go ahead.
Yes, hi. I had 2 questions. One was that I was a bit surprised to sort of learn about the Spanish acquisition, and in your annual report you also talk about building IT capabilities and possibly serving it as a creating a business around that. And to the layman, it seems that the India opportunity is so large, so why bother about these things? So could you help us explain, could you give us some more sense around why it makes sense to be in Spain and to also think about an IT business, if I've read it correctly? And the second is if you can talk a little bit more about your online brand and how that is doing. It seems that it's scaled up reasonably well, but would love to hear what's the latest on that.
Okay. So, I just want to sort of reiterate the question that you have asked so that I have understood it. Mr. Saraogi, the question is that what is the philosophy behind the Spanish acquisition? Is that correct?
Yes, exactly. And also the philosophy, I don't know whether I've read it well in your annual report or not, but you talk about building an IT platform business as well, and whether so the philosophy around that as well, especially if India is so attractive as an opportunity.
Yes, sure. So as far as the Spanish thing is concerned, Spain is really the manufacturing hub of a lot of the western part of Europe. It is still a low-cost economy which is there, but it continues to be part of the European Union. It has, if you look at the entire European Union market, it has at the moment, this company has only 1% or less than 1% share of the entire market. So even if the market was contracting, the opportunity for this one to grow will be huge. There is now the opportunity of supplying from Spain to the US. It is across the Atlantic. It has the opportunity of supplying to the northern part of Africa. It's also a small little sea, and then you are there in Africa. So it is very centrally located, and it's a low-cost economy. That is the reason that we looked at Spain and touch wood for it. It is panning out exactly in the same direction. There are a lot of technologies which here in India we have developed, which can now be transferred there. And, so for example, the shoe industry. There are special forms that we make for the shoe industry, and that company doesn't do. But it is completely surrounded by the shoe manufacturers in that area. So such opportunities and all this kind of combined together, there was a big potential, and that's the reason that we went there. And as I said, Corona or no Corona, Corona has only amplified that potential, but that has turned out to be good for your company. Second is the hiving off, not the hiving off, but let's say starting IT business we named the company as TACO. So it's been naturally that IT has grown to be a big part of our industry, and when we or of our company, and as we developed within the company here. We developed across continents to Australia and to Spain. We learned how to handle their needs and requirements, how to ensure connectivity. We were able to maintain the hardware here, take care of all the licensing issues, everything. And while we were doing this and interacting with the world, we came across many people who were either our joint venture partners or our suppliers or vendors or our customers who said that they would want similar levels of IT to be extended. And it was at that time we started thinking, and this was about 2.5 years back, and then came to a conclusion that there was a potential. I know that India is a monster at supplying IT to the world, and there are big names like TCS and Wipro and all these people. However, for the mid-level, for the small level, for all that, there was an opportunity. And surprisingly, now that we have done it, there is an opportunity in India too. And we are interacting with the government and with some other companies here. And that company is also beginning to get orders from outside, and it's already showing that it was the right decision to do. Your question number 2 was on online brands. So yes, these COVID times have shown that people are far more comfortable in dealing with e-commerce. We were already into it. Our products do naturally take up that in spite of being bulky, can be compressed, packed into a box and be delivered. And of course, there are already marketplaces like Amazon and Flipkart. So we address that market through Amazon and Flipkart, and we address it through our own brand.coms. The last 2 months, I don't have ready numbers right now, but the last 2 months have been a good growth over corresponding 2 months of the previous year. So we have it reasonably well covered, and now we'll see that how this market grows. Okay.
That's very useful. Thank you. Just one follow-up, if I may. The whole IT piece and the Spanish piece, if we assume that the management and financial resources are limited, which I'm assuming they are, I'm just struggling to figure out how this adds a lot more value rather than just being focused on India and building that opportunity. So how do we, if you can help peel the layers a little bit more and help me explain the decision-making process about why it makes sense to be there?
Okay. Look, the way I look at it is like this, that we are large players in India. We have large possibilities of growing far more, whether it's on the manufacturing side and then on the marketing side. However, our experience is that an organization, irrespective of how much resources you throw into it, still has some intrinsic capacity to grow. There are hurdles and there are, roadblocks which keep coming up. And irrespective of the opportunity, irrespective of the size of the organization in that opportunity, it still has some intrinsic, let's say, level that it can grow with. That's one. The second is that the kind of business, which is our primary business of manufacturing foam, the raw materials are sourced globally. They are supplied to the other places. The way it is manufactured is similar. There is a value that we bring to companies like the Spanish company that we have acquired, and it's a good way to increase both your top line and bottom line. And what better proof is than what happened from April onwards as far as this year is concerned. That just to exist in other realities or other geographies has always been is a good idea.
Okay, thank you.
Thank you.
Thank you. The next question is from the line of Raj Mehta from Raj Mehta and Associates. Please go ahead.
Thank you, sir, for giving me such an opportunity. I would like to ask you one thing. The foam industry, where you serve to B2B in auto sector, how does Mayur Unicoaters and Sheela foam are different, or are they to a competitor to the same industry which they cater to?
So, to the best of my knowledge, and I would confess right in the beginning that I know very little about Mayur Unicoaters. This is, I think, the Jaipur-based company, right? Mayur Polycoaters?
Mayur Unicoaters. Suresh Podar company.
Yeah. So, look, what they do is to make rexine, and what they make is also polytextiles, which is a normal cotton web or even polyester web coated with a resin on top. And what they do is, of course, they do polyurethanes also, but those are the product is completely different. I mean, the product is a textile that is manufactured. A product is something which is used then as a covering. So where we would, we are not competitors at all, but where we could have some synergy is if a bus seat is to be made, we would provide the cushion and they would provide the covering on top. So it's a different industry. We don't do any PU coated textiles. They don't make any foams, you know. But that's where the combination will come.
Okay. And my second question is related to the maybe after a 5-year period, what are your targets with respect to the growth of the company? Where are you looking for the great opportunity where a particular, just like a sleepwear was a brand which gave a tremendous growth in the past. So what will be the growth driver for next 5 to 10 years for a company?
So, Raj, let me say this, that, you know, these are absolutely uncertain times. I mean, our production and our market and sales, everything went to a zero, and we kind of restarted. So for a month and a half, everything was zero. The conditions are also changing with time. You know, whether it is work from home, whether it is e-commerce, whether it is small cars, whether it is online business, whether it is airline business going to a zero, trucking business changing. I think this is a uncertain time which is there. What do I look at 5 years? I may be able to give you some thoughts on it, but these thoughts can also be changing, you know. For example, I would look at e-commerce as a big part of the business. I would look at exports as a sizable part of the business. I would look at subsidiaries outside India as something which is not an anathema, but something that could be there. The current subsidiaries, their potential to grow that I would see. So I think these are few areas which is there. Then the most important part is our current business, which is mattresses. And let me say that most people thought in March and April, that mattresses would be the last thing to come around because it's a non-essential item. But fortunately for us, the people do not think so. And it may be because they spend a lot of time at home. It may be they understand the importance of a mattress, etc. But it is not a non-essential item. It is an essential item. And therefore, there would be growth in the brands will grow, organized sector will grow, e-commerce will grow, furniture will grow, both from the import side and the potential to export. So this is the area. What kind of numbers you're looking 5 years down the line, I would take another a quarter or two for things to kind of settle down and then be able to predict it.
Okay. And sir, one more thing. I'm just 23 years old and I'm a practicing chartered accountant. So if there will be any opportunity where we can work together, I tried to reach to the company but could not able to convert that. So if at all there is anything, then please let me know. Thank you for the opportunity, sir.
So Raj, first of all, compliments to you that you're only 23 years old and you have asked some very relevant questions and you're already a chartered accountant. I would say that just connect up with Mr. Dhruv Mathur, the CFO, and then we can figure out if there's something.
Can you just provide me the email ID or something where I can drop a mail to him?
I'm so sorry to interrupt. May I please request you to rejoin the question queue for any further questions, as we have people waiting for their turn. Thank you. A reminder to the participants, if you have a question, please press star then 1 on your touchtone phone. The next question is from the line of Apurva Shah from Phillip Capital. Please go ahead.
Good morning, sir. Thanks for the opportunity. Sir, what will be our market share in organized market, and is there any change in either some sort of a competition intensity in last 3 years and our market share as a whole in organized segment?
Rakesh, would you take this question, please?
राकेश जी शायद म्यूट पे होंगे. Can I take this one?
Yeah.
Okay now.
So the organized sector is around 35% of the total market, and in the organized sector, our share has been increasing every year. So the last survey that was done, it was at 30%.
Okay, so 30% of 25% of 14,000 crores.
30,
right, sir?
Organized sector is 35%. 35.
Oh, okay. And so, is there any change in the competition intensity because of emergence of either omni-channel or maybe some emerging retail giants? So, have you seen any change in the competition intensity?
So online, definitely, there is a higher growth in that channel, and that is, the channel has even last 2 years it has been growing by about 30%. Post lockdown, the growth that have been witnessed on online are upwards of 50%. So that definitely is growing much faster given the environment. Otherwise, what we see is that the competition is trying to improve the retail, which people did a couple of years back, and they're also improving the display and interaction with the consumer at the point of sale. So that's a good thing for the industry, because that's how you make the customer buy the right mattress, and the importance of mattress in life of customer goes up. So that's what is happening in the market.
So thanks for the explanation. So my next question is on, we spend substantial amount on sales and advertisement, so which is roughly 10 to 12% of our top line. So will we continue with that strategy, or we will rework on that strategy in the current situation?
Rakesh, can you continue on that, please?
Yeah. So see, right now the expense on sale is more on the customer. There's a shift between the incentives to the trade and to the retailer to the consumer. So I foresee that as far as the positivity, as far as mattress is concerned, it's you constantly need some call for action. So I foresee that the spends will be of similar level. But what will definitely go down is on the marketing side, because the brand has already attained a very high brand salience. So as the sales grow up, that's an opportunity for expense to go down, not so much on the sales side.
Understood. And so lastly, what kind of CapEx you envision over next 3 years?
Sorry, you are not audible on this.
So what kind of CapEx we envisage over next 3 to 5 years time?
Can I take this one, Paulji?
Yeah, please.
So normally we incur around 45 to 50 crores to maintain 10 of our plants, plus any greenfield project which we take up. We have bought a land in Jabalpur, and in next 2 years or so, a capex of close to 50-60 crores is expected in that. So this is the major capex. Yeah.
Okay. Thank you very much, and all the best.
Thank you. A reminder to the participants, if you have a question, please press star then 1 on your touchtone telephone. The next question is from the line of Priyanka Khandelwal from ICICI Prudential Asset Management. Please go ahead.
Hello, sir. Thank you for taking my question. I just wanted to check if the volume number this quarter includes sales to institutional centers or quarantine centers, or all of it is attributable to retail and e-commerce sales.
Can I answer this?
Yes, please.
Yeah, so it does not include the 10,000 mattresses which we gave as in the CSR activity, but rest of the mattresses supplied to institution on sale basis are included in this number.
How much would that be?
That would be around 3,500.
Understood. That's helpful. Thank you.
Thank you. The next question is from the line of Shivakumar from Unifi Capital. Please go ahead.
Yeah, thank you for the follow-up. Sir, what is the current share of the online channel in the whole organized industry?
Rakesh?
Yeah. So the share of online is close to 4% of the overall industry.
Okay. And what would be our share, sir? Is it in line with our offline share in the online channel specifically?
So no, we are late starters as far as online is concerned, but catching up very fast. We are already at number 2 level on the Amazon. So the rate of growth has been much higher than the industry growth for us in the online channel.
Okay. Sir, and now we have bed-in-a-box concept, right? We are also able to supply that kind of product, right?
Yes.
Great. Sir, and I'm revisiting the earlier question which I posed, which is basically the export revenue opportunity. I know you said we will see something in this year itself. Will you be able to quantify, sir, as to what can be the number we can expect from that front?
Shivakumar, let me not do that. I mean, there will be absolute wild, because, it is still kind of firming up. Even if I could make a guess on the order of it, I would have done that. But it could be large, it could be not so large. So let's leave it for 1 quarter. Next time I'll definitely share that.
Right, sir. I'll revisit the question in the Q2 call. Sir, I have a particular question to Dhruv, sir. Sir, on the fixed costs, can you revisit your trajectory that you're getting? You said something like 75 crores, right?
That's right. That's right. I said so.
Okay. So 75 crores per quarter is the run rate we should assume?
Yeah, it will be pretty high in the first quarter, of course, because the operations were low. And then I think it would be close to 10-12 crores per quarter.
Okay. 10-12 crores for the quarter. I mean, there's some... If I look at the other OPEX this quarter, it was about 32 crores, right?
So if you see the other, I was talking of 75 crores in terms of fixed cost only. But your other expenses include selling expenses also, freight also, which are all variable to the volume. So please don't go by this absolute number and difference in that, because these other expenses are a combination of fixed and variable expenses.
Right.
And if you want to know more breakup, you can talk to me offline. I will provide you that.
Sure. Sir, and the breakup of the other income?
Sorry to interrupt. May I please request you to rejoin the
So it's
queue?
mostly on the money which has been with the company, the investment of that money, kind of other income.
Thank you. The next question is from the line of Pankaj Seprewal from Kotak Mutual Fund. Please go ahead.
Yeah, good morning, Rahulji. Good morning, Dhruv. One question which I had was you alluded to an opportunity led by government initiative, which is furniture. And if I read the press recently, you have introduced bed in that category. Can you just take us through what kind of opportunity, because that's a large sector and that's multiple time of the sector where the mattress industry is in. So can you just share your thoughts on how big this opportunity could be for us, and what are your plans? Would you like to set up your own factory? Would you like to have a small commitment towards outsourcing and then test the market and move on? That's a large opportunity, probably, when we look at it as a layman from an outside perspective. Thank you.
So you're right that the furniture industry is far huger and far bigger compared to the mattress industry. But furniture as a if you were to define it, also has items which are so many of them, starting from a bed to a table to a dining table to cupboards to sofa sets to do all those things, which are clubbed together as furniture. It's also a very unorganized industry as far as India is concerned. Majority of manufacturing, majority of selling will be by very, very small kind of players. Now that's the reality. That's a fact on the ground. It's also true that there is a large imports of furniture which were happening mainly from China, but also from Malaysia and Vietnam that were coming into the country. In fact, of the organized sector, even upwards of 60% is being imported. There is another dot, which is that there is a large export of furniture from all these countries, from the Southeast Asian and China to the Western world, that is happening. Now, looking at this entire thing, to see that where India kind of fits in, the government of India decided on or identified furniture as a segment which can be used both for cutting down on imports into the country, increasing exports, and for growing the local market. As far as our play in is concerned, definitely the cushioning part of the furniture, we are already into it and we do a reasonably good job. And the ability to make foams which are comparable to any or the needs and requirements of any of these Western countries, whether they are fire retardant ones or high resilient foams or which are anti-allergy kind of foams, etc. We have all that capability that we can do. Where do we now fit into it? I think at the moment we have all the ideas and thoughts and at different levels. There was a time when we thought that we could start by even outsourcing from within the country, but came Corona, and what it has done is, one, these manufacturing units have suffered on their own. The second, they are also experiencing large orders, etc., which are needed now for catering to the country and for exporting. So that capacity seems to be also not available at this point of time. These are the facts of this. We have looked at setting up a very large facility, fully automated, with best of the inputs into it, and but the sheer diversity of the furniture, the sheer way that it is sold, I think we still need to get some handle on that. We are in a learning mode as far as that is concerned. If a big structure or a big complex for making furniture comes up by the government of India, where everybody would sort of pool in, we would be happy to be able to supply foams and different kind of foams to it. Now, have I answered your question? Probably not, but I just opened my mind and my heart out and put it in front that this is all the present conditions. This is uncertain, but let it evolve, and then we should be able. But on the intermediate part of the furniture, we're already there, at least on the foam part of it. We are testing by introducing beds, and some beds which are revolutionary or which are different from what is existing today. And that part we will continue to test and find out. A bed is a very normal thing that can happen in a showroom where we are selling mattresses. A sofa may not be that normal. So I think we're still just looking at all those areas, and will revert back in due course.
Okay. Thank you. Thank you, and wish you guys all the best.
Thank you. The next question is from the line of Vinod Malviya from Union Mutual Fund. Please go ahead.
Yeah, good afternoon, sir. I just had one small question, that was regarding this IT business which you all plan to start, which you all have started actually. can you just provide me what kind of a capital have you all kept aside, or how much capital you all will be deploying in that business over the next 1-2 years to fund the operations? Any number to that?
Virtually zero. We already have the fees. I mean, whatever will be, it will be only in terms of operating expenses. For space, etc., we don't need it. For connectivity, we don't need it. For any equipment, we don't need it. And it will be self-sustaining. We have not put aside any capital.
Okay, so I was coming. Yeah, because I was just looking at this company. It has almost like 200 employees right now. So business will take its own time to come. So there would be some operational losses which need to be funded. So any like number, if you can help me on the operational losses which this business will incur over the next 2 years.
So that part of it, I mean, whatever we've hyped it off as a separate subsidiary, but those people, those employees were already a part of the company. Yeah? I mean, that expense we were doing. So there is an arrangement between the principal or between the parent company and that. Whatever we were spending on those employees, we are giving as monthly charges to them. And therefore, they don't require anything. That expense was already happening.
Okay, so it was just part of your parent company. Now that gets shifted to the subsidiary.
Exactly.
Okay.
And as the jobs are coming in and as the projects are coming in, the people would be added, and that would be like one step after the other. There will be no step expenditure on. We have space. There is no problem. We have enough space in our corporate office, and the infrastructure is there. Everything else is there.
Okay. Thanks, sir. That's all from my side. All the best.
Thank you. We take the last question from the line of Abhisar Jain from Monarch AIF. Please go ahead. Mr. Jain, you may please go ahead with your question.
Sorry, I was on a mute. Good morning, sir. And congrats for a good performance in Spain and Australian subsidiary. Sir, my question is related to your opening remarks where you mentioned that organized is doing better than unorganized, though unorganized is not as such, completely, washed out or completely closed. So, sir, just picking, a little bit in terms of the company's outlook here, that, organized sector, sir, do we have some internal projections that what it could be in the next, say, 3 to 5 years from a 35% level that it is today, and whether the current increase which we might see in these times in the organized sector, that then can be retained or built upon by the organized sector as such. So if you can throw some light, it will be helpful.
Okay, thank you, President. What I mentioned in the opening remarks was that from the time that everybody came to a zero to starting and getting back to normal level, it is that trajectory. In that trajectory, the unorganized sector is trailing behind the organized sector. And that's all I said. Now, whether it will reach up and catch up or not, there may be a little bit of a difference that may happen. But barring this COVID times, whatever was happening earlier would continue to happen, which is shift from the unorganized sector to the organized sector, and which may entail that some of the unorganized sector goes out of business, or it may entail that some of the unorganized sector becomes organized and become a part of the organized sector. So I see that happening, and so what is currently we look at this as 35% of the market. Expect in about 3 to 4 years' time, this should be close to 50% plus of the entire market, the organized sector.
Understood, sir. Understood. That's helpful. And sir, do we also aspire or have a target in mind that within that organized sector we need to be much higher than 30% that we are today, or will it be too much to ask for or difficult to achieve?
So I don't know where that we are 30% of that of the organized sector, and aspirations for sure, and I think the basic building blocks and the fundamental foundations are already there. And if there is any slip or anything else which the other players in the organized sector have, we are there to fill that up and take it up. And definitely the aspirations are to take that 30 to 35 or to 40%, for sure.
Right, sir. Right. So, I mean, sir, that in terms of distribution also, we'll have to make much more efforts to achieve this and also lead this unorganized to organized shift. Will that be a right way to think about it?
Yes. I guess when we go up, each part of the value chain will need to up its ante, will definitely need to do better than what it is. So whether it's the distribution channel, whether it is the number of people coming to the showrooms, whether it's the conversion that is happening of the people into buying or purchasing, or it is the upselling that is happening, all that will need to improve. And the distribution part of it that you said, for sure, the supply time to the distributors, the stock that they need to carry, the fulfillment that they will be providing to the customer needs to be quicker. All that will definitely happen.
Right. And so last question on the online channel, which you mentioned that is seeing a very, very fast growth now. Sir, so do we have any further strategy around it? I know we have a SleepX brand, which we sell there. But considering that the growth is so high, so would we have a further advancement of strategy or broadening of this strategy to get more benefit out of this channel?
I think we did already talk about this in one of the questions that was asked, and we see this as an important part. It is growing very fast, but please also remember that the base is very small, and therefore the growth rate appears as very fast. We have the Sleepwell brand, we have the SleepX brand, we have their brand.com. We are participating in the various marketplaces. And therefore, I would say that all the courses are covered. Now, we continue to keep improving on, whether it's the supply times or it is some products which are to be added to it, etc. So, I mean, on the sheer coverage of the market, we're there.
Okay. Great, sir. Thank you so much and best of luck.
Thank you.
Thank you. Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments.
Thank you. Thank you very much, everybody, for joining in. And as usual, the questions were incisive. They were very pertinent, and they continue to be a learning exercise for me and for the entire team. I know that some of the questions, one was not very certain, or one appeared as not very certain in answering them, but that is because of the uncertain times. We couldn't have made it. There are the change from end of March, or the 23rd, 24th March, to now, which is in August. The change has been extremely huge, and as I said, the operations had come to a complete standstill, and then we have ramped up back to about 85%. So it does bring in a lot of uncertainty. It does. The geopolitical situation has been changing across the world. The China factor has been playing out in many ways, and therefore the answers may not have been to the point. I would say that the coming the coming 2 quarters should really be far more affirmative and far more certain as far as the outcome is concerned, and the sharing with you are concerned. I do expect, like most of the world, that between the time of Diwali to New Year's, we should be back to the pre-COVID times, if not better. At least some other geographies are showing that we could be better. And in the meantime, I make an earnest request for everybody that please stay safe for you and for your family. And if there is one input I can give you, it is only that if there are symptoms appearing on any day or at any time, do not neglect them. The first 1 or 2 days or 3 days are extremely crucial. If attended to, people get well in about 5 to 6 days' time. If unattended to for 4 or 5 days, then they worsen, and there are cases of the lungs not or continuing to have some scars, etc. So with those words and praying and hoping that everybody remains safe and we bide this time, learn from it, make whatever changes that are necessary, and look at all the opportunities. Thank you very much once again.
Thank you. On behalf of Edelweiss Securities Limited, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.